and welcome. You're watching Market Edge here on ET Now. I'm Harsh Saita. With me is Snehi Shah. And let's quickly take you through the headlines, the top headline for today. Looking at markets staging a powerful comeback. Nifty 50 rebounding from a one-year low to log its best monthly gain since December 2023. Broader markets steal the show as Nifty mid-cap surges over 13%, small-cap jumps 18%. BSE-listed firms add 41 lakh crore in market cap during the April rally.
And growth momentum cooled in March as the industrial output slipped to a 5-month low of 4.1%. Weak manufacturing activity dragged overall IIP, signaling softer demand conditions.
Pharma stocks remained in focus with deal leadership and regulatory triggers. Sun Pharma announced a $11.75 billion acquisition of Organon. Cohance roped in ex-Cipla boss Umang Vora. Dr. Reddy's meanwhile cheered Health Canada's approval for the semaglutide generic they manufacture.
Nifty earnings have shown a mixed trend so far. Eternal delivered a steady show with resilient food delivery margins. Ultratech posted strong volume growth. Maruti Suzuki on the flip side disappointed with earnings below estimates. Bajaj Finance saw stable net interest income and PAT with better asset quality, and HUL shone brightly with volumes at a 12-quarter high.
Sugar stocks rally on policy tailwind as Nitin Gadkari pushes for 100% ethanol-powered vehicles. Shares of Balrampur Chini Mills, Sri Renuka Sugars, EID Parry and Dhampur Sugar Mills gain 2 to 6% on demand visibility hopes.
And Federal Reserve held the rate steady at 3.5 to 3.75%. There was a sharp divide within policymakers as votes split 8:4, marking the highest descent since 1992. Signals growing uncertainty on inflation and rate path ahead.
Okay, with regard to markets and how they fared this Thursday in terms of the move, we were down around 0.75% thereabouts. We slipped just below the 24K mark at close. We did slip, in fact, to the 23,750 odd mark, and thereafter we rebounded. So we did fairly well for ourselves. In the week gone by, we've gained around 1% or so in trade, and that's how it's played out. In terms of the Nifty Bank, there was weakness there as well, 1% lower on the Nifty Bank. The PSU banking index seeing much more of a cut than the Nifty Bank. Even for the week gone by, we've seen a sharper cut on the Nifty Bank. There you go, nearly 4% lower on the Nifty PSU Bank this week. So we've seen a fair bit of pressure with regard to those sectors. Let me talk about some sectors which have actually done well on a difficult day of trade. IT and pharma are those two which really stand out. 1/3% higher on the IT index. We've also done decently okay on the pharma index. 2% lower on metals in trade on Thursday. 1.7% lower on the Nifty PSU Bank. The Nifty Realty Index down 1.5% as well. The Nifty FMCG down 1.4%. So you saw pressure on all of those pockets. The Fin Nifty, the Bank Nifty, both down nearly 1% in trade at close. So broadly, that's the broad brush take. But broader markets, Naeem.
Broader markets, mixed show of strength coming in from the broader end of the market. In fact, it was the small cap index that has done really well, while the mid cap index over the course of the week has ended with a cut. That's the intraday chart, of course. Let's have the longer term chart for the week gone by. And if you take a look at that on the small cap front, yes, almost a 2% uptick coming in, and the small cap 250 index was shining bright. There were days where we've seen the Nifty in the red, but the small cap has outperformed by being either flat or in the green. The Nifty mid cap also not all that bad. 0.6% higher in a week that has been largely volatile, and we've seen mixed trading days coming in. The broader end of the market at least has shown some sign of resilience. But let's take that conversation ahead. We've spoken about what the week was, but more importantly, what can you expect from the week that's lying ahead? We have Mr. Ajit Nayak, the Senior Technical and Derivative Research Analyst at HDFC Securities, joining us on the show. Ajit, hi, thanks so much for your time. Good to be speaking with you. First off, give us your sense on how you are reading the charts for the Nifty. It's been quite subdued a week for the benchmarks, and more importantly, the kind of strength or weakness that you're foreseeing for the Nifty Bank, given that it has been absolutely under pressure in the week gone by.
Yeah, first let us speak about the Nifty. So if we look at the Nifty from a technical perspective, on 24th March, it has made a similar kind of a low of 24,790 odd level. And today there was an interesting pattern. We did break that low, but we did not sustain below that low. So we called such behavior as a sweep of liquidity. So whenever there is a sweep of liquidity, there is a high chances that market tends to move in a northward territory and can test 24,300 level. So whenever we look at the chart, we also take a support of OI distribution chart. So to look exactly what the big traders are exactly looking for, which level, and how the trades and the dealers are placed with their delta and gamma on the basis of the open interest data. So what does the today's open interest data suggest? So if we look at the open interest data at 24,000 level, there is a lot of put addition. So I think after a couple of session, if we see couple of session, there was lack of fear in the market, but suddenly in a day or two, we can see that fear coming back in the market. So that is not a really a good sign, because if we look at the India VIX, it was taking a support of 17.25 level from where exactly the breakout happened, and we saw a rally till 29 level after giving that breakout, and we are revisiting that neckline of 17.25. So it is very important to watch this level. So if we break that 17.29 level on a VIX and we see a rally in Nifty, so that will be a good sign for the trader and for a Nifty player as well, that we are consolidating, we are taking a price wise time wise correction, not a price wise correction. If it didn't, and we are this VIX is moving above 20 level, and similar kind of OI data keeps on building up at the call side, then there is little risk for the market. So for me, as of now, 23,800 is a very important level, because there is a good pattern, which intraday pattern, which has happened today, breaking the low and bouncing back about that low. That's a good trap sign, a bad trap sign. And if it sustain about that level, we can see Nifty heading towards 24,400 to 500 mark.
Your picks, therefore, in a market like this?
Yeah. Please come
Your,
again.
your top picks in a market like this?
So because market is not very bullish friendly, so I am coming up with two picks. One, I am looking for a short side, and one I am looking for a long side. So I'll come up with first pick as a Hindalco. Hindalco, if you look at the chart, there is some bearishness developing on a Hindalco chart. Also, if you look at a weekly, there is a clear-cut negative divergence which is happened on the Hindalco chart. And if you also look at the metal index today, metal index shows like it was showing some pain, and similarly, even the Hindalco is showing the same kind of pain, a relative performer in a downside. So I'm considering Hindalco to sell with a stop loss of 1080. I'm looking for the target of 980. The only request for the trader would be, as soon as you are in a favor, it is very important to trail the stop loss, because the overall trend of the market seems to be quite positive. So we need to lock in the profit quickly whenever we are taking a contrarian bet, because the long-term charts of the metals are still positive. The second pick from my side is Adani Ports. So Adani Ports chart is very fantastic. If you look at the chart from a weekly perspective or also from a daily perspective, we can see a deep cup pattern, and it is sustaining about that 1,600 odd mark today. Even in a falling market, it just tests that the neckline of 1,600, and closing above that level gives us a confidence that there is more steam left on the higher side. So I would recommend to go long on Adani Ports with a stop loss of 1586 for the upside target of 1770.
Dalco on the short side and Adani Ports on the upside, looking good to Ajit right now. Ajit, let's talk about some sectors that have been in focus so far. And let's start by talking about PSU banks, the top losing sector in the week gone by. So much pressure there. Yes, we've seen that ECL provisioning norms coming into play. And while all of that is on the fundamentals, are you seeing any buying opportunities in some of the PSU names, given the kind of dip that we've already seen very recently?
PSU, if you look at PSU index, if you look at on a monthly or a weekly time frame, yes, they are still positive. But the rally was so much, and the angle of the rally is so steep that I think we should look for some more consolidation. If it consolidates for say next 4 to 5 weeks, then I would be looking for the PSUs stocks to go for a long side, because if you look at the chart on a monthly time frame, there is a negative pattern on the candlestick which has developed. So I would wait for the PSU to come around 7,500 mark, then consolidate and give some bullish indication with a good candlestick pattern, and then we would think of entering on a long side. Otherwise, till it does not cross 9,070 mark, it is a sell on a rally kind of a sector.
Okay. Thank you so much for joining us this afternoon. We'll let you go on that note. Let me switch focus. Let me go across to Raghav. In fact, he's here with what made headlines this week. Raghav, what's on your list?
Well, absolutely, Harsh. Nifty closed in red this week, losing at about 0.2%. Coal India and Tech Mahindra were the top gainers this week, and Indigo and Axis Bank were the top losers this week. Top sectoral gainers were Nifty Energy and Nifty IT, while Nifty top sectoral losers for Nifty were Nifty PSU banks. Speaking about certain news that came in during the week, March IIP data came about, which suggested that IIP is at a 5-month low at 4.1%. This is showing subdued manufacturing activity weighed on the larger overall IIP data that came about. Pharma remained in focus for the week. Sun Pharma had acquired Oregano for 11.75 billion. Cohance roped in ex-Cipla boss Umang Vora, which led the stock to react. Dr. Reddy's received a Health Canada approval for its semaglutide generics. Nifty earnings came out a lot number in the week that gone by. Eternal had a good show with lesser than expected softening in the food delivery, and QC continued to be and the EBITDA margins were positive for them. Ultra Tech showed a good show. They saw a good amount of volume growth with strong EBITDA and showed an upward trajectory of 25% on a QOQ basis. Maruti Suzuki had a weak show with numbers below estimates. Bajaj Finance has had a NII PAT in line. Provisions asset beat the expectations of street. Hull came out with its data with good show in terms of its volumes with a 12-quarter high. Sugar data came about. Sugar saw a sweet gain with Nitin Gadkari pushing for 100% ethanol powered vehicles. Stocks like Balrampur, Shri Renuka, EID, Parry and Dharmapur gained a lot in the week that gone by, about 2 to 6%. FOMC rates were just came out yesterday. The rates are held at 3.5% to 3.75%. 8 to 4 was the voting that happened in this particular meeting. It's the highest descent since 1992. There's also an update on the US-Iran West Asia crisis. Brent is up 15% in the last 4 trading days, and as per Axios, Trump is expected to reject the plan being proposed by Iran for the peace deal. This is what was the news that clouded the week that gone by.
Okay, on that note, we'll slip into a very short break. Thanks, Raghav, for taking us through that. So, viewers, that was the top headlines and everything that made news and had an impact on the street in the week gone by. When we return, the conversation will turn more forward-looking. We'll give you a sense of what to expect in the week to come. So, stay tuned and we'll be right back. Back with Market Edge, and as promised before the break, we've taken a look at what the technical setup looks like for the week to come. Let's also take a look at the fundamentals factors at play. And we have Mr. Uttam Kumar Shrimal, the Senior Research Analyst at Axis Securities, joining us on the show. Uttam, thank you so much for your time. Mr. Shrimal, rather, thanks so much for your time today. And first of all, give us a sense of how you have read into the major earnings that we've seen in the week gone by. Consumption as a pocket continues to do well. You've seen good numbers from Eternal, from HUL. On the flip side, there was massive weakness in something like a Maruti Suzuki. So the auto pack is looking weak. Give us a quick read-through of how you have seen the earnings and what is your view on what the remainder of the earnings season could look like.
Yeah, thanks, Snehi, and thanks for having me on the show. So if you see, during the month of April, Till date, 21 Nifty companies have come out with their earnings. And their earnings have been largely in line with expectation, and they have beaten the consensus estimates. So overall, good set of earnings till date, and we believe that moving ahead also, another 29 companies will come up with their earnings. Then based on that, we will basically in a position to see how earnings season has panned out. But if you see, whatever earnings has come in terms of earnings, if you see, Nestle has come out with a very good set of earnings. Varun Beverage has also come out with a very good set of earnings. Then HUL has also come out with a good set of earnings and also given good guidance moving forward also. Yeah, auto, in terms of auto, Maruti Suzuki number were not in line with expectation. And in the same case, if you see, IT numbers were also not, IT numbers were also poor, and guidance were also not liked by the street. So most of these stocks got corrected. But moving ahead, I believe that whatever earning has come, earning has been in line with expectation or has beaten the expectation, and we believe that same should happen with most of the companies, Nifty companies reporting earnings, and we believe that metal pack could be a metal pack would report better earnings compared to other sector in this earning period. Along with banks have also reported good set of earnings. So we believe moving ahead, earnings may turn out to be good. But the real risk is right now is a crude price, which is hovering around $120, and this sustains from here on, then there can be some earning disappointed moving ahead.
Yeah, how much could that be, Uttam? If for example, crude stays at $120, that's what Brent is currently at. What could the earnings look like in FY27? Because we're not getting that indication from the companies that are coming out with commentary. Could that be a big disappointment to what some of the estimates are or currently are really factoring?
See, Harsh, at this point of time, most of the managements are indicating that they are in a position to combat the current rise in crude because most of the companies have raised their final output prices also. But moving ahead, I think there will be some cut in earnings. At this point, at this juncture, I think there can be some 2 to 3% earning cut. But I can tell you only when most of the companies come out with their earnings moving ahead. Currently, it is evolving situation, and it's not exactly how much earnings cut will be there. It's very difficult to say, but there will be definitely there will be earning cut, and as the crude remains elevated from here on. For the sufficient period of time, then there will definitely there will be more earning cut in quarter two also. But at this juncture, I believe most of the companies, as I explained, have come out with a good set of earnings in the Nifty. And earning cuts they will be there, but it should range between 1 to 2% at this point of time.
Okay. And also, Uttam, give us your sense on a broader level. What is going to be the next big trigger that takes the markets ahead? We've seen markets be in a range-bound band for a very long time now. Markets have largely been in a limbo. Talk to us about what could be the next big trigger. Could the markets alone surge because you have a fall in crude? If that happens, do you think earnings alone would be enough to take the markets ahead from here, provided they turn out to be good? What's the next big trigger that the street should be looking out for?
Currently happening is global uncertainty is weakening the market. So earnings is okay. So earning will be one of the driver for the market. But unless and until uncertainty related to crude gets resolved and the resolution doesn't come and as well as Strait of Hormuz doesn't get open, then there will be the impact will be there. And I believe that moving ahead, this as soon as this gets resolved, resolution comes between Iran and US. then that will be the biggest trigger for the market moving ahead. But you also have to take into consideration that market has corrected. Earlier, we were trading around 21x to 22x of forward earning. Now we are around 17 to 18 times forward earning. So that earning, this has given confidence to the market. And recent quarter four result has been not been mixed, and has been stable. So the market is factoring that. And moving ahead, I think apart from the earning, the biggest trigger will be the resolution of current ongoing situation, global uncertainty. So I would like to say, watch Strait of Hormuz as you watch earning report currently.
Yeah, keep your eyes on the Strait of Hormuz. Thank you so much, Uttam, for coming in and speaking with us. Very good having that perspective.
Yeah, thanks a lot, Hutch. Thanks a lot.
Right, let's move on though. Kunal Vora of BNP Paribas is flagging margin pressure for auto companies and has trimmed expectations. In fact, let's listen in to what he has to say. He's explained the rationale for that.
We are starting to, if I look at our own estimates, we have started factoring in certain sectors. We've lowered our estimates for automobiles, for example, where we see margin pressure from the commodities and currency. We lowered our estimates for consumer staples, consumer durables, cement. Even in case of financials, we have lowered our credit growth expectation slightly, earnings expectation, which we started the year with an expectation of about 20% earning growth. We already lowered it to 15%. So this is still early days. If this is where we stabilize, what we'll see is the second order effect, which will be in the form of the fuel cost increase, which could happen in the coming weeks. If that happens, then we will have to start discussing about whether there could be some demand destruction. From a government perspective, the headroom to spend will be low. I mean, like they will have a larger fertilizer subsidy to deal with. And with the excise duty having already been lowered, the government spending could come off. And that's something which could hurt sectors like infrastructure.
Okay, so that's the word coming in from Kunal Vora of BNP Paribas. But if you take a look at everything that's lined up for us in the week to come, of course, we're going to be watching out for that crude level, and any softening over there is going to be a welcome move for the street, not only ours, in fact, global markets too. But talking about our markets, the earnings that we're looking forward to in the week to come involve names like Kotak Bank from the Nifty pack. You have M&M, L&T, Bajaj Auto and Titan on Friday, the next Friday. That is going to be on our anvil as well. So a bunch of earnings coming in, even from the consumption pack. You have something like a Godrej Consumer, Blue Star, Dabur, Marico. Lots of companies are going to be coming out with that number. And I'm personally, of course, very inclined to see what those numbers look like, given HUL has been great. Varun Beverages has done very well. So yes, FMCG looking like it could do well this time around. But other than that, some big names include Muthoot Microfinance, you have Meesho, PB Fintech, Paytm is going to be an important one to watch out for in the upcoming week.
Meesho was a big buzzer on Thursday's day of trade as well.
There was a brokerage initiation note on Meesho as well, so which is why that stock was in focus. But on that note, I'm afraid we're completely timed out on this edition of Market Edge. Thanks so much for tuning in. Stay on to ET Now for more news and updates.